Hello, everyone, and welcome to this webinar from Employee Ownership Australia. My name is Jess Mitchell. I'm co-chair of the EOA board, and my day job is Employee Equity Consultant and Australasia Lead for Tapestry Compliance. I'm qualified as a lawyer in Australia and the UK and have been specialising in share plans and more specifically, global legal and tax compliance for over 2 decades. Today, I'm joined by one of my fellow EOA board directors, Marie-Louise Czech, and I'll hand over to her in a moment to introduce herself. Before we get started, though, I would like to acknowledge the traditional custodians of all the various lands that we're meeting on today. For me right now, that is the Gadigal people of the Eora Nation, and for Marie-Louise, it's the Bunurong people of the Kulin Nation. We pay our respect to elders, past and present, and we extend that respect to any Aboriginal and Torres Strait Islander people joining us today. On a day of national sadness, we'd also like to extend our heartfelt condolences to the victims of yesterday's attack at Bondi. This is a tragedy for them and their loved ones, for the Australian Jewish community as a whole, and by extension, every Australian. Our thoughts are with you. We will go on with the webinar, and I'll now pass over to Marie-Louise to tell us a bit about herself.
Thanks, Jess. It's lovely to be here. I'm a reward lead and a HR professional with experience working with global companies for over 25 years and implementing and managing share plans, as well as managing reward programs and employee benefits. When focusing on global share plans across all types of employees, I'd like to just share some insights with you about practical tips, effective communication, and touching on compliance and just little practical things you can take away with you. Thanks, Jess.
Thank you. I'm just going to check we have the slides up. Okay, there we go. Okay, so at EOA, we aim to represent employee ownership in all its forms across Australia. That includes startup equity, employee ownership trusts and similar models, and of course, employee share schemes or ESS, which are also known as equity incentives, equity compensation, share plans, which is the term I've used for this webinar, and various other names. Essentially, any arrangement where employees are offered equity in the company group that they work for. EOA's last webinar covered an overview of share plans used by private or unlisted companies. And needless to say, plans offered by public listed companies are an important part of the employee ownership landscape too. EOA is a representative body for share plans offered by all Australian companies and also the share plans offered by overseas-based companies to employees in Australia. In this webinar, we're going to focus on one relatively narrow but also very big aspect of that, which is offering your share plans to group employees overseas. There's a lot to think about here, and to keep it to a somewhat reasonable time, we are going to just look at the essentials over the next half hour or so. We'll leave a bit of time at the end for any questions, so please put those into the chat box as we go along, and we'll either answer them directly or we'll get back to you if we don't have time. At the end, we'll share some EOA updates and hopefully get your feedback on what you'd like to see from EOA going forward via some interactive polls. So to start with, I want to clarify what exactly we're talking about with essentials of offering your share plans overseas to the extent that is not obvious. Getting down to the basics, what is a share plan? I think everyone listening to this will likely be familiar with general share plan concepts. But in this webinar, I'm referring to pretty much all forms of equity offered by company groups to their employees. Usually for broad-based or all-employee plans, it will be some form of share purchase plan, which includes a discount or a matching right. For executive plans, we'd most commonly see share rights, which are also known by a bizarre number of other terms like performance rights, restricted stock units or RSUs, conditional awards, free shares, and so on, which all have the same basic features. There are lots of other types of employee equity, including derivatives like phantom or cash-based plans, or even fund units, which operate in a similar way. And of course, other share-based offerings like restricted shares, options, which could be nil cost or market value or even premium priced, stock appreciation rights, growth shares, and a whole variety of combinations and creative structures. That's not even getting into performance conditions, metrics, and all the other many threads that go into equity plan, design, and operation. The point is that in this webinar, we're addressing what companies need to think about for all of those when extending overseas. Overseas is also pretty self-explanatory, and not just for the share plan professionals, but what I would like to highlight here is that what works in Australia doesn't necessarily work overseas. As far as legal and tax compliance goes, sometimes there can be an assumption that compliance in the home country, wherever that is, will extend to employees overseas, but unfortunately, that's not always the case. Every country has its own set of securities laws, corporate laws, tax laws, etc. And while there are commonalities, there are often key differences that need to be taken into account. Then there's a whole set of operational concerns when you're managing a share plan across multiple jurisdictions, and Marie-Louise will be speaking to that. What the essentials are depends on who you're speaking to, but of course, the umbrella aim is generally to offer a plan or plans that are effective in achieving the company's goals and value for employees. As I mentioned, my job is dealing with the legal and tax implications of overseas share plans for client companies. And Marie-Louise has spent her career on the front line working for companies offering share plans around the world. So we'll be looking at what we see as the essentials from both those angles. To start with, I'm going to hand over to Marie-Louise, who's going to share her invaluable practical experience and insights from working on the inside for issuer companies.
Thanks, Jess. Each company will have its own objectives for implementing a global share plan. For example, to retain or reward employees. Alternatively, it might be to promote an ownership culture, aiming to motivate and engage employees for the company needs for the long term and growth. Your employee share plan design should align to company goals. For example, to nurture an ownership culture, to make employees feel invested in the company, you need to communicate that the company values employees being part owners. Where employee share plans have performance-based measures, then through the design, you can reinforce a culture of collaboration, accountability, where everyone works towards the same goal and the same priorities. In participating in employee share plans and becoming shareholders, employees ideally see that linkages between their day job and the success of the company's financial rewards, as well as promoting growth. I will speak on the following slides about the practical applications of your design when extending the share plan to your offshore entities. Thanks, Maria. So from a governance perspective, given the legalistic nature of employee share plans, you need to engage your key contacts and departments in your company so they are on the same page for governance. For example, HR, head of HR or remuneration and rewards, the company secretariat, and your tax teams and communication teams, and importantly, your payroll and your finance teams. So if to this end, this typically creates a sub-working group that you can meet with on regular occasions to discuss all aspects. If we start with the company secretary, they endorse the plan rules and look at other key documents. And ideally, they first go and source board approvals that you can actually offer this extension of the employee share plan overseas. Additionally, they'll provide approval on securities and filings and disclosures and trusts. So they have quite a big accountability. The head of HR or reward typically is responsible for invitations and timelines and managing the implementation and also defining the eligible population. I think it's really important that HR communicates with its offshore entities early, the timelines, because you can appreciate that each country has its own schedules and they may have salary reviews or bonus in between a share plan offer. Therefore, it's important to work efficiently with timelines and advise early. Another important aspect is to source local advisors, because we may not be totally familiar with the local rules. And I know Jess will touch on these a bit more. To determine what share plan design adaptations are required, you need to engage with your overseas companies as well, and where possible, keep a consistency with your Australian parent. Governance includes checking for any new legislative changes annually, and reviewing costs and design and communication updates are reflected. Additionally, checking on participation take-up, because that, at the end of the day, is what we're trying to achieve. So checking things like an annual survey, you'll get valuable information to be able to improve year on year. Thanks, Maria. So now we're just going to look at some currency management. Employees outside Australia may be exposed to currency fluctuations when dealing with Australian denominated securities. So it's really important to communicate currency settings and reduce confusion at offer or vesting. When providing data for uploads to our share plan administrators, it's important to make the currency clear, particularly on allocations. Also ensure your files reflect the currency. Specify if the documents have the, if there's a share or cash equivalent, what denomination they're going to be delivered in. Also document your foreign currency rules and rates. For example, if you're going to use a spot price on settlement or a VWAP, a volume weighted average price. Consult with your payroll, finance and tax teams so the cash payments withholding obligations are funded in the right currency. So there's no room for error. Where applicable, provide examples so that people can see the value of their award and their withholdings and their local currency. A practical calculation example really brings this to light. Thanks, Maria. So I've mentioned a few times that communication is paramount. One of the first things you do is tell your IT department in advance of the whitelisting, so they're familiar with the emails that come through. Then send in the invitation. I think one of the things that I've learned along the way is with all the scams going on, people sometimes don't look at the offer. So one tip that I have is that send your invitation from a familiar email first, a company email, and then tell them of the email that's coming on the offer so they recognize the email address because it may not be familiar. And that way people will, not overlook it. And then the other thing about in communications is to engage in various ways. First, consider your audience. If it's professionals or frontline, you need to cater for the demographic. So you might look at education through FAQs, online forums, workshops where you work examples, or it might be your document Q&A. I think all these different forms of engagement are really important. At the end of the day, you're trying to deliver what the value of the share plan is for the employee, and you need to give them opportunities for asking questions. So it's changing the terms to simplistic terms where possible, like ownership, reward, and growth, so they can understand it. And it's the connection to the company goals is important. And also sharing the potential risks like share price fluctuations and the rules around eligibility. In summary, share plans communicating effectively in simple language and consistently where possible with parent company, and communicating to employees so that they have the opportunity to engage and ask questions is a really important aspect of the success of participation. Thanks, Maria. This is a bit of a checklist just to, have something, a guide for you to consider. And so the first one is obviously something Jess will consider a bit more deeply, but just make sure you have your local securities clearance. Engage with your COSEC department, particularly filing requirements. because you don't want the admin burden if you haven't done that or to be facing any penalties. Check tax treatments with your finance teams, look at immigration aspects, particularly visa and immigration, implications for using shares to non-locals. Engage with your local advisors on that as well. And as mentioned, check currency aspects. Advise well in advance about blackouts, trading windows, mandatory holding locks, and impact of timing of grant exercise. Ensure your share plan administrators and their platforms can handle cross-border compliance and multi-jurisdictions. Invest in an effective communication plan. Check grant letters, plan rules, tax guidance, and make sure they're translated in the appropriate languages. Be audit ready, checking you have your required documentation and records, and make sure you have your governance protocols in place. Also have a summary of your risk mitigation and make sure you look at the cross-border compliance risk and provide that to your audit and risk committee. So at the end of the day, a successful implementation in Australia, implementing an Australian employee share plan overseas, you have to balance consistency and considerations in each jurisdiction, considering eligible employee cohorts, and also local legal and tax compliance and effective communication campaign. I hope these tips have been helpful. Thanks.
Thanks, Marie-Louise. So Marie-Louise mentioned a few times the importance of complying with local rules wherever you're offering your share plans, and I'm going to go into a bit more detail on that. In terms of when you need to consider legal and tax due diligence and any actions to achieve compliance, most companies will carry out some level of DD before offering a plan into a new country for the first time. Hopefully, there'll also be regular review of the position for as long as the plan is in operation. Ideally, that would be on an annual basis, and in my view, the best timing is generally a couple of months before each major launch. That gives enough time for any filings or other necessary actions to be completed in time, but you don't want to carry out your due diligence so early that the review becomes outdated. Where your resources don't stretch to reviewing your overseas share plans or maybe all the countries where you offer them on an annual basis, then there are other practices that balance the compliance risk with those commercial considerations. For example, you might review all your countries every second year. You might review your countries on a rotating basis over a period of several years, or you could choose to review your key markets on an annual basis and then smaller or lower risk markets less often. So actually, why do you need to look at legal and tax compliance for your share plans overseas? The main reason is that, as I mentioned earlier, when you offer securities into a jurisdiction, even if that's only to a handful of employees of your company group, you're triggering the legal and tax and regulatory regimes within that jurisdiction every time. The position in that country may or may not be impacted by the position in your home country and by how your company views the plan. So the aim is to comply with the requirements in every jurisdiction where you're offering a share plan and to make sure the right tax is paid and so on. But ideally to do it in a way that's cost effective and, as Marie-Louise touched on several times, in a way that offers global consistency across your countries. The key risk areas, let's check the slides. The key risk areas from a compliance perspective are tax, securities laws, and foreign exchange rules, which are also known as exchange controls or sometimes currency controls. Tax might be the biggest risk factor that issuing companies have to manage. Employees have to pay their tax, and in most countries, employers have to withhold and report the tax. One key thing to check right at the outset is that there won't be any surprise moments of tax. For example, if you're granting options, you want the taxing point to be when the option is exercised or the shares are transferred, and not when the option is initially granted or when it vests. If you're operating recharge or chargeback arrangements, then it's good to check in advance whether a corporate tax deduction will be available and any requirements that might be attached to that. To the extent that a trust is used in connection with the plan, it's important to know whether there are any tax implications for the employee or the company, Canada and the US being prime examples of this. Another tax aspect for withholding and reporting and accounting purposes, and again, balancing a global approach to this with any stringent local rules. Final point to touch on with tax is in some countries like the UK, US, France, Ireland, there are tax beneficial plans available which can offer really significant benefits to the employee and sometimes also to the company. It's often possible to take advantage of these regimes just with some tweaks or a schedule to the global plan rules rather than having to set up a whole new plan for one country. On the legal side, the big ones are generally the local securities laws and foreign exchange requirements that need to be complied with when you're offering your share plans in another jurisdiction. Luckily, in most countries, there are exemptions available from onerous requirements like producing a prospectus. Often there are specific exemptions for employee offers, or you can rely on exemptions for private offers or for offers under thresholds in terms of the number of offerees or maybe the value of the offer in that country. Devil's in the detail, and it's important to make sure that the conditions of exemptions that you're relying on are reviewed on a regular basis. For example, there might be relevant limits to keep an eye on, and often there are mandated actions associated with an exemption. That might just be that you need to include a bit of extra wording or different wording in the offered document for employees in that country, or sometimes the company needs to make a notification to the local authority. Of course, in some countries, there are ongoing filing obligations which are more onerous, particularly in the Asia Pac region like China, India, and the Philippines, to name some key examples. Where it's not feasible to offer your standard plan to employees in a particular country, for example, if you only have a handful of employees and the legal requirements are just too onerous, a common solution is to offer a phantom or cash variation of the plan. This is where employees never have a right to actual shares, but they have a right to the economic equivalent on the same or similar terms. That can be a practical solution where the cost or complexity of compliance is too much, or sometimes it's possible to work around the issues in another way, for example, with some minor restructuring or tweaks to the plan documentation or local operation. There are other legal areas that are important to consider too, but that don't tend to be showstoppers in the way that a major securities law or exchange control filing or tax issue might be. I've listed some of these on the slide, and to run through them very briefly, documentation requirements. This covers things like translations, offer and acceptance rules, and also crucially ensuring that your offered documents include any special wording needed for a particular country. That might be because it's required to rely on a legal or tax exemption, or maybe just as a disclaimer or a company protection to mitigate local risks. Employment or labour laws. These can impact share plans, for example, with good and bad leaver provisions, acquired rights risks, and sometimes employee consultation obligations for local employers. Data protection. This is an ever-expanding issue globally, and as a very general comment, companies need to ensure that their share plans are covered by their data protection policies and any associated requirements, like filings or data banks. Salary deductions for contribution plans. These are usually okay with informed employee consent, but there are a handful of countries where regulatory approval is needed on top of that, and there may also be limits on how much can be deducted. Restrictions on using overseas nominees or brokers for the company, for the issuing company, or for participants, and then also foreign asset reporting obligations for participants. So how do companies go about actioning an overseas compliance exercise, whether that's initial or a recurring review? There are elements where you can rely on your payroll teams and administrators, and especially if they're familiar with the local tax treatment of share plans, which they often will be in the jurisdictions where they're very common. In particular, income tax rates, whether any social taxes are payable for both the employee and the employer, whether withholding is required, and if so, any restrictions or rules around that, and what needs to be reported to the local tax authority by the company. Local teams might also be able to handle any tax filings that are required for your plans, in addition to standard remuneration reporting or filings. There are often nuances and complications with the tax position, and local teams may not be familiar with the requirements, especially in those jurisdictions where share plans aren't as common. So, for advice in those cases and the legal aspects, as well as assisting with any filings or extra approvals that might be needed, generally companies will work with their external share plan lawyers. That can be especially helpful where there are multiple jurisdictions that need to be coordinated and managed. Your share plan lawyers can hopefully assist with not only identifying your obligations, but also prioritizing the most important ones. In some cases, you need to take a pragmatic approach, which looks at both the local rules and market practices. That is, what is expected by the local authorities and what do other companies in a similar position tend to do. After all of this, I'd just like to add that when you start digging into the different regimes overseas for your share plans, it can seem prohibitively difficult or expensive. That is indeed the case in a handful of jurisdictions, but actually only a few. In most countries, it's possible to offer equity to employees on a consistent basis and to hopefully enjoy all those benefits of having employees own shares in the parent company without major compliance hurdles. There are many, many global companies that do this for their employees worldwide. Already come to question time. We have some time for questions. So if there's anything on your mind, please put it in the chat box and we'll do our best to answer either now or later. Otherwise, I'd like to talk a little bit about EOA's future and ask for your input. Next year, we'll be looking at more training and other resources, and we'd love to hear your feedback on what would be useful for you in whatever your professional role or personal employee ownership passion is. We have some great webinars planned for the new year, including sessions on state payroll tax, loan funded plans, current ESS research in Australia, and some recently released ATO data covering many years of share plans. We also have an ambitious reform agenda to take forward, and we're looking forward to holding some more in-person events. So those are our current plans for the new year, but we want to ensure that we're guided by the membership that we're representing and by everyone interested in employee ownership in Australia. We have a couple of very short polls to help with getting that feedback, and we would love to see your responses.
I'll kick off with the first poll. So we'd love to know which EOA activities do you want to see? It can be multiple, so please make your choice.
Hmm.
You can also jot down what you want to see most of. Thanks, Jess.
Okay. We're going to look at those in a moment, but I'll move on to the next one. Can we move on to the next poll? Okay. I hope these will work. We're experimenting a little bit with the Zoom polls, but I'll let you know what you should be seeing. This is around content. What are your ESS hot topics and which one is most burning for you? We've only included share plans in this poll because EOA's other interest groups are unlikely to be listening to this webinar, so we will cover those separately. So for the poll, the questions are, here are my ESS hot topics. 1, technical guidance on legal, tax, and regulatory issues. 2, practical guidance on engagement, administration, and operational issues. 3, market trends and insights. 4, other. And what is your very hottest ESS topic that you would like covered? Okay, we are going to look at those separately. I have got a few comments and questions in the Q&A box. There's a comment that chat is disabled. I can see some questions and hopefully anyone else has put them in, but has been able to do that. But otherwise, please get in touch with us outside of the webinar and we will get back to you. In terms of questions, the first one was units in a unit trust. Um, I think that that's referring to when I was covering various forms of equity at the start of the presentation. So I mentioned restricted stock units or RSUs, which is what in Australia would commonly be called share rights. So a right over tracking the value of a share and to receive a share on vesting. Um, you might also uh, you might also have units in some other kind of trust, like a real estate investment trust, or for example, um, units in a fund operated by financial services institutions. For example, fund managers might be rewarded or incentivized with units which track the value of a fund, and then to the extent that that unit vests, that might be paid in fund interests or in cash or even in shares. There's lots of different type of structures, and then there's a whole, especially with the financial services institutions, there's a whole layer of regulatory complexity on top of that. But certainly, I think for for any type of equity, including a unit, then these same considerations apply around how do you engage participants, how do you explain what is being offered and the value of what is being offered and what needs to happen to receive the maximum value. Um, what are the legal, tax, and regulatory issues that might be triggered if you're offering those awards in whatever form to employees or to participants in other countries outside of your home country? I hope that answers the question. Otherwise, we have a
Well, one more question, Jess. Bill asked if the notes will be circulated because he thought the checklist will be useful for him. So I'm pretty sure we will circulate the PowerPoint as well. So
yes, we will circulate. We will have the recording of sorry, a chat as well. Chat is now available. Okay, if anyone else would like to put in comments or questions, and then please do so now. Um, but yes, absolutely, we will circulate the recording to the people who registered for the webinar, and then we will also have it available in some form through the EOA website. Um, so absolutely. And if there's anything else that you have on your mind, then please get in touch with one of us directly, and I'm sure that we'll do our best to help. Um, okay, otherwise, I think we can wrap up the webinar there. It's been a relatively short one. As a final point, I'd love to ask everyone to join EOA as a member if you're not already. We'll include a link in the email with the recording of today's webinar. It's also available directly on the website. Joining EOA is a fantastic way to support employee ownership in Australia and to access all of the benefits that are available to members. So thank you again for your time today. On behalf of EOA, I'd like to wish everyone a wonderful festive season, hopefully a good break over the holidays, safe time with your families, and we will see you in the new year.
thank you, everyone.